Welcome to part 1 of our small business tax series. In this first video, we'll go over everything you need to know about U.S. tax deductions for small businesses. We'll start with the basics, like what a tax deduction actually is. Then we'll talk through deductions versus write-offs. And lastly, we'll review the 12 most common deductions and how to claim them, so you can hopefully pay less on your taxes. Before we begin, the lawyers staring at us off camera want us to remind you this video is for informational purposes only and should not be relied upon as tax or legal advice. Since everyone's tax situation is different, contact your tax advisor if you need assistance. Good? Okay, great. This isn't awkward at all. Tax deduction is one of those terms that gets thrown around a lot, despite not everyone knowing exactly what it means. Hey, let me grab those concert tickets. They're a tax deduction. Like my new jet ski? Tax deduction. A tax deduction is a business expense that you can subtract from your taxable income, which can lower the amount of tax you have to pay. It's as if you earn less money, and therefore you have to pay less tax. In order to be deductible as per the IRS, a business expense must be ordinary and necessary. Ordinary is defined as being common and accepted within your industry business. Necessary means the expense is helpful and appropriate. So when it comes to tax deductions, it pays to be basic, so likely not that jet ski. Some examples of expenses you might be able to deduct include advertising and marketing, transportation and travel, office-related expenses like rent and supplies, insurance, and utilities. Before we dive deeper into specific deductions, let's clarify the difference between a tax deduction and a tax write-off. Luckily, the answer is pretty simple. It's a tomato-tomato situation. They can be used interchangeably. So to avoid any confusion, we'll be using tax deductions throughout this video. Okay, now let's get into the 12 tax deductions every small business owner should know about. Your unique situation will affect how much you can deduct. So we always recommend speaking with a tax professional as well as doing your own research. Right, guys? Still not awkward at all. First, let's talk about startup and organizational costs. Currently, you can deduct up to $5,000 of costs spent on starting your business from your taxable income, as long as those expenses are from the same year that you started your business. Deductible startup costs can include market research, including surveys or consulting, product research, training, equipment expenses, and property expenses. Another $5,000 can be deducted as organizational costs. Organizational costs refer to any funding used towards registering your business as an official entity, such as corporation or LLC. So, filing fees, legal fees, accounting services, and organizational meetings. And don't worry if you exceed $5,000 in year one. You can deduct a total of $50,000 of startup and organizational costs over the first 15 years of your business. Did you know your cost of goods sold can actually help you save on taxes? Let's back up a second. Cost of goods sold is defined as the total amount of expenses used to produce and sell products during the tax year. Keep in mind, you can only count products you've actually sold to customers, not products or materials still sitting in your inventory. Everyone's a huge fan of this tax deduction. If you use your cell phone for your business, you can usually claim a portion of it as a business expense. Keep in mind, you'll need to be able to explain this business use to the IRS. We recommend getting an itemized phone bill to show what exactly was used for business purposes. If you regularly work out of a home office or rent a space for your work, you can usually deduct the cost of creating and maintaining your workplace. Keep in mind, the space needs to be exclusively used for business, such as a spare room or workshop. No fancy kitchen renovations allowed, unless your daytime cooking show maybe. But be warned, if your space isn't used 100% for business, the IRS could deny the entire deduction. Okay, brace yourself with some math. To calculate your home office deduction, find the square footage of your home office and divide that by the total square footage of floor space in your home to determine the percentage of your home used for business. A portion of your mortgage interest, insurance, utilities, repairs, maintenance, depreciation, and rent may be eligible for your home office deduction. Any office expenses, tools, or technology used for running your business is deductible. This includes everything from paper clips to a new laptop to the software needed to do your job. You can expense most items used exclusively for business that are $2,500 or less by making what the IRS calls a de minimis safe harbor election on your tax return. It's best to contact a tax pro if this is sounding too complicated. If you use your vehicle for business purposes, there are quite a few expenses you may be able to deduct. As long as you track your business mileage and personal mileage, you can deduct the business use percentage of your total vehicle expenses, or you may be able to deduct a standardized per mile rate established each year by the IRS. Gas, licenses, parking fees, and car insurance are examples of deductible vehicle expenses. Anytime you've used your vehicle for business purposes, such as picking up supplies or equipment, should qualify. Who knew that eating food could reduce your taxes? Well, business-related food, that is. Company-wide parties for your employees and meal expenses billed to your clients are 100% deductible. If you're buying snacks for the office or taking a client out for dinner to discuss business, that's 50% deductible. Any meals bought simply for entertaining clients are only deductible if you separate the entertainment portion from the meal portion on the invoice, since the entertainment portion is not deductible. And yes, that includes concerts. Also, the meals need to be reasonably priced. An extravagant 10 courses probably won't make the cut to the IRS. Up next are bank fees, which don't sound very fun at first, but can be a blast when it comes to tax deductions. You should have a separate bank account and credit card just for business purposes, and if you don't, we highly recommend getting one ASAP. It'll make your life way easier, and any fees charged by the bank are 100% deductible. Depending on your business structure, location, and industry, you might need to pay for tax and licensing fees. We know no one's a huge fan of fees, but the good news is these fees are deductible. Whether you're taking a taxi to meet a client or flying and staying overnight for a conference, any travel expense for business-related purposes is 100% deductible. Keep in mind, it's important to have proof that your trip was indeed for business by keeping a travel log of the date, time, and place, along with who you met and what was discussed. This deduction definitely doesn't include family vacations or lavish getaways that happen to include a single business meeting. We're guessing you probably have some kind of business insurance. As long as it's ordinary and necessary, like general liability insurance or workers' compensation insurance, it's 100% deductible. Getting the word out about your business is a key part of running it. As long as your advertising and marketing is ordinary and necessary, it's 100% deductible. This includes things like business cards, flyers, advertisements, online marketing, or even branded propeller hats to hand out to people on the street. Be careful about gifts to customers for promoting your brand. You're only allowed to deduct $25 to each individual per year, and it will come out of your own pocket if you go over. Now, let's go over how you can claim small business tax deductions. Your business structure determines how you can claim your small business deductions. If you're a sole proprietor, you'll use Schedule C on your individual return. Partnerships, S corporations, and C corporations claim their deductions on their respective tax returns. You calculate your total deductions and determine your taxable income on these returns. Taxes can be tricky for even the most experienced business owners and are specific to your unique situation, which is why we always recommend getting help from tax professionals. By doing your taxes with the help of a bookkeeper, it's easier to catch mistakes you might not have noticed and find every last tax deduction you're eligible for. Wave's in-house tax, accounting, and bookkeeping experts can help answer any questions with their one-on-one coaching. Or they can prepare your records and manage your books in Wave's accounting software all year round. You can visit our website or the link in the description to learn more about how Wave's bookkeeping pros can help you get organized and ready for tax season. So, to recap, tax deductions or tax write-offs reduce your business's total taxable income, lowering the tax you pay. There are 12 common deductions you should know, and the specific deductions you qualify for depend on your business's structure and activities. And that's it. I think we deserve a nice, ordinary, and necessary dinner after all we've covered. No? That's not a... Never mind, we don't. Don't forget to check out the other 3 videos in our 4-part small business tax series. Good luck and happy deducting.